It's August 27th, 2023. I'm going to start off with the US economic calendar, go over the ES futures and the NASDAQ, and then look for some top 5 stock picks going into next week. So last week on Friday, the market was extremely choppy for the first hour and a half, and then begin to rally into the close relatively strong. And I think that momentum is going to carry over into Monday because there's nothing scheduled on that day. So with no news is good news. And I think the market's going to continue the rally from Monday. Then Tuesday, we have, there's only 3 scheduled events, nothing market moving. And then we have ADP with GDP revision right at the open. So that is a market moving event. So last Wednesday I think it was pretty bullish. But Wednesdays, most of the time, I think 80% of the time, it's a little bit choppy to bearish. But if Wednesday begins to be bullish or is another bullish day, then we could see usually Wednesdays, if they are bullish, they get really bullish. And then on Thursday, we have initial jobless claims. That's market moving. And on Friday, we have non-farm payrolls with U.S. unemployment rate that is also slightly market moving. Going into September, that's a labor holiday for U.S. citizens, so that is likely to be a non-trading day, and I would expect the market to be a little bit choppy into Thursday and Friday, potential sell-off. That's what typically happens into a stat holiday in the States. And then we got a Fed beige book on Wednesday, and the standard Thursday and Friday initial jobless claims again, with a non-market moving Friday. And then following that, we'll go to the ES futures. So the ES futures on the daily, that's what I have here on the screen. We did identify a wave 1, 2, and 3. That wave 3 has completed on July 31st. And you could see from the extensions, it reached about the 1618 off this low. And now we're in a wave 3. This is a wave 4. And this gets a little bit complicated because first there's this gap here at 4,300, and I think that's going to happen this week going into the stat holiday. I don't know if it's going to happen on a Wednesday or Thursday or Friday, but I think Monday will be a pretty bullish day, trying to capture a lot of those longs into a Wednesday, Thursday, Friday, and then sell off to fill that gap next week. And I don't know if it happens on the first day of Mondays or Tuesday. But like I said before, going into an American stat holiday, a lot of tricky things happen before that stat holiday. So that's a long weekend, and usually positions are closed. And not many people, I would assume majority of people do not want to hold positions over a long weekend because of the uncertainty of geopolitical events and other events that could cause the market to sell off. But that's something to keep in mind going into Monday, Tuesday, Wednesday, Thursday, Friday. So that gap is still open right here. That's a bit of a problem. You can't really see it here with the gap finder, but if we go on a lower time frame, say the 30-minute, it should be able to pick it up. I'm not sure why it's not picking it up here, but the gap is right there, if you're which was created on June 9th. Okay, so what I like to usually do is look at the 78-minute time frame to see if there's any setups. There's a Darvas channel that's forming, but it's quite wide. There's resistance here at 4,483. So if the market does carries through with the rally from Friday, then a double top is likely to occur here at 4,486, that would be a good time to place some puts or get into a sell short position for a market to pull back and try to attempt that gap fill at 4,309-ish. There is also a gap above the current levels, right? I believe right there at 4,597. So this is where the market gets a little bit difficult, because there's two unfilled gaps above and below 4,414. Obviously, the path of least resistance right now is on the downtrend, but every downtrend, if you don't take profits on your puts, the market has a tendency to have a rip your face off rally and rally back to maybe the 6 or 8 or 21-day moving average. And that increases in probability, especially when you have a gap above 4,497. These future gaps get filled almost greater than 90% of the time. So because we have two gaps, one below and one above, and we're in a wave 4 on a wave in an Elliott wave pattern has a generic structure where once wave 3 terminates, then wave 4 could pull all the way back and retest the top of wave 1, which is approximately 4,183. That would be not a bad opportunity to load up on long positions. Maybe I'm thinking about December contracts. If it gets down to there, that would be retesting the 200-day moving average. Now, it's not necessary that the wave 4 has to go all the way back and retest the top of wave 1. It's just the generic structure, and that's what makes the current wave, with the existing two gaps above 4,413, that's 4,300 and 4,500. That's what makes this wave 4 very difficult, and you have to be extremely precise in this, or picky with the typical setup that you're looking into, going in long or short. So if the market starts to rally extremely hard with zero chop, then you want to probably look to go into put positions at the end of the day. If the market starts to sell off hard, then you want to be a little bit cognizant of if the sell-off is going to follow through on the next day to fill that 4,307 gap. Okay, and then once we have confirmation and the levels hold here above, the gap fills and the levels hold, and you get this choppy pattern, then most likely the next wave is going to be 5, and that will run this market all the way up to about greater than 5,000 by the end of the year. Okay, so, and then of course December and January are very bullish months of the year, and that this target right here is just a projected target using the lows off of October 2022. So it could overshoot, or it could just reach up to this precise target at 5,333. The estimated time that it'll take is not known. I would expect it to probably, if I would be to be conservative, it would be the end of January into earnings. However, it could happen sooner than later. I would probably look to get long positions for monthly January contracts to capture this wave 5. All right, what I like to also do is go into my Thinkorswim chart, and this is the weekly. And on the weekly TTM squeeze, that's the Bollinger-Keltner channel, you can see that there's not much squeezes forming, maybe with Boeing, but everything else looks relatively have a momentum that's kind of going. Let's take a look at the NASDAQ. Right, you can see that the momentum on the NASDAQ is below 0, so there is selling pressure at the moment, and it did have a pretty bearish daily candle. If we look at the weekly, you can see that the momentum is fading, so there's more selling pressure than buying pressure. It did make a 52-week high at around 16,000 and then pulled back. The ATR weekly support here is at 14,321. So there's also a gap in the NASDAQ. Let me see if I can pull that up in the TradingView platform. Yeah, so there's a gap here at 14,538. So as you see how the moving averages are all stacked up on top of each other, after the 52-week high around 16,000, the moving averages are now crossing over and creating a complicated, complicating the positions of each moving average overlapping each other. So this is a pretty, these types of moving averages create a lot of confusion. However, if there is an opportunity for a trade, those trades would be a lot more easy to get into when the positions and the price pull away from these moving averages and get extended. But that's something that we'll have to look into detail. However, it is important to note that with this volume profile, we're at the point of control, and that's where all the trading activity has happened in the past. I think I have this set for 6 months, and most of the big moves, when they do happen, they happen from this level at 15,011. So I would expect the market to continue to trade within this range. It's not going to really, there's always a probability for it to rally up and fill the existing gap in the ES and also in the NASDAQ. So you can see that gap right there that occurred on August 1st, and a gap down on August 1st to August, yeah, so August 1st, that's where the gap was created at 15,798, 15,825. Okay, so yeah, what you want to do is kind of either wait for the gap to fill here. Making money on the puts is amazing especially when you catch a really big sell-off, but obviously we'd have to know some sort of market trigger to induce that sell-off and have it sell off about, looks like it's a 3% move. So it's not that much of a move, but 3%, as you may know, people may exaggerate that's the doom and gloom of the market. But you have to understand that the market did have a tremendous rally from its lows. Year to date, it's up probably, let's take a look. %, but then if you compare that to the previous year, it's relatively flat. Okay, so the consensus, or my assumption here, is that this gap is going to get filled this week. Monday will probably be a follow-through from Friday's momentum. And then going into Wednesday and Thursday and Friday, the market will sell off and attempt to fill that gap at around 14,546. And then for the ES, it's going to fill that gap at 4,302.5. These are important numbers to remember if you're looking to position into long calls or long positions for the Christmas rally or wave 5. Now, the other question is, if this fills and it doesn't hold, what's the probability of the market going to retest that level right here at 4,193? That would be the top of where wave 1. You can see there's a lot of selling pressure that occurred 3 times. That's a triple top, and would it retest that? And that is probable. And what you want to do there is look at once the gap fills, you want to be patient and then see what type of daily candle forms. Is it a green daily candle or a red daily candle? And how extended it is away from the green, those green dots, which represents the 6-day moving average. So obviously we won't know until it happens. We just can make assumptions about what can happen. We have moving averages here that are stacked below. We have, that's the 50, this is the 100, and then we have the red one at 200. So a 200-day moving average is quite severe. It is probable, but the gap will overshoot the 100, filling the gap here at 4,302. And we want to, and if it does get to that level, it will get extended, and then that would provide an opportunity to buy at the end of the day for an immediate rip face-off rally right back above the 100. And that would indicate that wave 4 has ended and wave 5 has commenced. Okay. Now, if the daily candle is red here during this week, after filling the gap, then there will be a rip your face off rally. The magnitude will be a little bit questionable. And then the following day, the sell-off will continue, and most likely it will continue if there's news in regards to, say, geopolitical issues, or who knows what kind of news will come up. But I think I'm siding on the gap fill and an extended price away from the 6-day moving average. And at the end of the day, or even 1 hour before the close, there's probably a 0 DTE trade that could come in and push the candle from a red, completely red thick candle bar all the way into a doji green candle, and that would be an excellent 0 DTE trade to capture about a 10 to 20x return. Once it closes green, and the tricky part here is it can close green at the end of the day and 15 to 2-3 hours later, because the futures continues to move. That will be the key to determine whether a long position or should be taken, based on the assumption that wave 4 is terminated right here, and now we're back to going up to the double top at wave 3 and then breaking through, going to wave 5, which is 5,000, at least 5,000 to 5,300. Okay, so I'm on the bullish side. Once I'll be on the extreme bullish side once this gap fills. So we're all kind of on the waiting on the fence here, but also keep in mind you can put on some spreads here below 4,300. That would be also ideal for those who enjoy trading spreads. Now I'm going to go into my daily Thinkorswim chart to see what kind of setups are forming on the daily. So here we have a gap in Apple at 190. And I believe that when the market was ripping higher, Apple was about $1.75 shy of moving toward the $200 mark. So there is a gap here at 190. There is a chance that this gap could get filled this week. And then once it fills, then we could see the market start to fade into September. So this is something that I'll be looking into getting positioned in on Monday. Amazon unfortunately has a gap here that it didn't fill at 130. The precise number is 129.84. The lowest it got was 130.58. It didn't quite fill the gap. So that's something that you don't want to trade until that gap gets filled. AMD is in a downtrend. There's nothing really going on here. All the TTM squeeze seems to show that the momentum is on the sell side. Apple's momentum here is improving, where Amazon's momentum is starting to get a little bit more weak. Boeing has a very similar chart to Apple. It has a gap here at 235, so I'll be watching for that. Roku's holding support at the 50-day moving average at $76, and The breakout level here is at 89. If it breaks out, then we have a run up to 100. Google has a squeeze or an A6 that's setting up. However, it did make a high at 134.25 with a gap open at 123. So this is a little bit tricky. It does look like the gap is being left open. And I think with the follow through on Monday, it'll remain open. After the long weekend, I think this gap will start to fill. Netflix, there's not much going on here. The momentum is going back and forth from buying and selling, and the trend is a little bit complicated since all the major moving averages are above the fast moving averages, the 6 and the 8. Nvidia had a massive earnings beat. However, it didn't exceed the expected move of $46. It sold off quite hard. However, it landed on the 6-day moving average, but there's also a gap here at 439. So a lot of gaps that are left open, and they will get filled. It's just a matter of time. We don't know, and knowing that September is a pretty weak month for the markets, it could happen in September. Tesla likewise also has a gap at 219. There's no TTM squeeze forming. The Metaverse does not have any TTM squeeze with a long wick. That long wick is an attractive trade for puts. I am looking at puts on Metaverse to ride this price all the way back down to retest the bottom of that wick at 276. If it pushes above 288, that would be my ideal position to start to add put positions going into Tuesday and Wednesday. And then Shopify, I think most of the gaps have filled here, except that major gap here on earnings is still left open at 47. So this is also a bit of a problematic chart on the daily. So each company, and looking at their daily chart, has gaps below that should fill, and the higher probability of it filling could be post long weekend. So my 3 preferred trades going into next week would be the Apple gap at 190, Boeing gap at around 235, and then Metaverse puts at 288 to ride the wick all the way back down to 276. All right, thank you very much, and I hope this helps.